10 years since the powerful investment bank Lehman Brothers filed for bankruptcy. In the days that followed, global financial markets lost 60% of their value. Global economy contracted by 5%. An estimated 8.8 million jobs were lost, and $19 trillion of household wealth was wiped out. Why didn't anyone serve jail term for such losses? Is the world any safer now? And what did it feel to be at the helm of policy making in those dizzy days? In our series, Lehman Crisis 10 Years On, we speak to the men who mattered in 2008, here in India and abroad, to get answers to some of these questions. Joining me now is Dr. Subbarao, former Governor of the Reserve Bank of India, currently Distinguished Visiting Fellow at the National University of Singapore. Dr. Subbarao, thank you very much for joining us. Quite clearly, the most prominent person we are speaking in this series, because Dr. Subbarao, on that day, September 15th, midnight, was just 10 days into his job as Governor of the Reserve Bank. Well, Dr. Subbarao, my first question to you is exactly that. When were you informed? If I remember right, you told me that you were woken up at midnight by the then Deputy Governor, Shyamala Gopinath. Just recount to us those moments, how you were informed of Lehman bankruptcy.
Well, just as you said, Lata, Lehman Brothers filed for bankruptcy sometime during the day, I think on September 16, during the day in New York, which was night time for us in Mumbai. So I recall Shyamala, who was Deputy Governor, as you said, at that time, waking me up around 2 o'clock and telling me that Lehman Brothers had collapsed and that there might be some instability in the advanced economy markets and that we must be prepared. So, you know, it's not as if we were completely unaware of some pressure building up in the financial system. If you throw your mind back to that period, you would find that in the week to 10 days before the crisis, there were a number of storied institutions falling one by one, starting with Fannie and Freddie. Then Countrywide went down, AIG came to the brink of a collapse, and Merrill Lynch vanished. Several big banks in the US were closed down. So they were isolated instances in the week to 10 days leading to Lehman collapse. But Lehman event was a big bang event. And the Reserve Bank, the experienced staff there, including Shyamala and other deputy governors, read the situation very well, very correctly, that this will have an impact much more than the earlier isolated incidents, and that we must be prepared.
You're right, of course, that you were, of course, before September 5th, 2008, the finance secretary, and therefore, you know, all sides were kind of somewhat prepared. How did you look, I mean, how was the Reserve Bank prepared? Did you get a sense that, you know, they were preparing for it for months or something?
No, I didn't get that sense. You know, if there was one central bank in the world that was actually prepared for the crisis, it was the Reserve Bank of India, because as we now know, it's well known that the RBI under Governor Reddy had instituted macroprudential measures. In fact, macroprudential became a fashionable term after the crisis, but much before it became fashionable, the Reserve Bank had tightened the regulation of the financial sector, both banks and non-banks. So there's one central bank that was prepared, it was the Reserve Bank of India. But even then, I would not say that the Reserve Bank saw a crisis of this magnitude and this proportion unleashing on us all of a sudden. And that night was actually quite a bit of hectic activity for all of us in the Reserve Bank.
Okay.
The night after Lehman Brothers collapsed. If you recall, at that very night, we had done two things. The first thing was to ring-fence the two subsidiaries of Lehman Brothers in India. I think Lehman Brothers had a non-bank finance company and a primary dealership. The first thing we did was to issue a statement ring-fencing them so that no money would go out from them. The second thing we did was to issue a statement that the Reserve Bank is keeping a close tab on the developments and is prepared to take whatever action is necessary. It was a very bland statement. In fact, because I was new to central banking, I was wondering about the necessity of issuing a very bland statement like that. But in the event, the experience, the cumulative experience in the Reserve Bank guided us into doing the right thing, which was to release a statement. And I think that went a long way in assuring financial markets the first thing in the morning.
Well, Dr. Subbarao, what happened in the days thereafter, following the Lehman crash? Did you have something like a war room? Would there be a daily, video conferencing with the finance ministry as well? After all, they also had to participate in what should have been a joint ring fencing of the economy.
Well, there is always a war room in the Reserve Bank, the Financial Markets Committee, which meets every day. But certainly during the crisis, in the days and weeks after Lehman Brothers collapsed, the war room, as you call it, was certainly much more active. If you throw your mind back to the situation immediately after the Lehman Brothers collapse, we had quite a bit of turmoil in our financial sector, right?
Yes.
Because bond yields had gone up, call money rate had gone up, exchange rate had nosedived, capital had fled, and there was fear, uncertainty in the banking system. So our effort in the Reserve Bank was to ensure that our financial markets function properly, unlike the Western markets, which are close to close to seizure, and to also ensure that credit continued to flow. So our actions in the Reserve Bank were guided by these two objectives. And you also talked about whether there was, dialogue or liaison or video conferencing with the government. It's certainly true to say that we were working very closely with the government, as indeed every country in the world was. So there was, you must understand that both for the government and for the Reserve Bank of India, there were shared anxieties, shared tension, shared uncertainty. And the objectives were also shared, that we must ensure that that confidence in our financial sector remains unshaken.
Let me come to the global scene as well. India was suddenly in the big league table. The G20 was created, and suddenly it was realized that India and China are all important in synchronized rate cutting or in bringing peace to the financial markets. Can you describe to us how was it? How did you get included? How did India get included in the global decision-making league table?
The G20, of course, came into being even much before the global financial crisis, much before Lehman Brothers collapse. But it became a much more important forum after the financial crisis erupted. I recall the first G20 meeting, very distinctly first G20 meeting after Lehman Brothers collapse. I think it was sometime in mid-October, in fact, less than a month after Lehman Brothers collapse. It was convened at very short notice on the sidelines of the IMF and World Bank annual meetings in October. You go ahead, yes?
Yeah, no, and in one such meeting when you were speaking, George Bush gate crashed into that meeting?
Yes. That's what I was going to get into, which is that, at that very special G20 meeting, I was asked to speak on behalf of emerging economies. I accepted the commitment. And, the meeting was around 7 p.m. in the evening in the IMF headquarter building, and there were about 125 people in all, governors, finance ministers, World Bank staff, and the mood was quite gloomy. So the meeting started with the first, of course, to speak were Hank Paulson, who was Treasury Secretary, followed by Ben Bernanke, and followed by Trichet, who was the president of ECB at that time. My turn came later after that, and I was speaking, because I had prepared a bit. I was making the point that the crisis had impacted emerging economies much more than is acknowledged around the world, and also that even as advanced economies, like you said, were synchronizing their actions, they must also take us on board, also tell us what they were doing, because what they were doing had an impact on us. What is happening in the global financial system had an impact on us. But as I was talking, my seat happened to be quite close to the door, so I saw somebody entering from the closed door, quite self-assured, but and followed by two grey-suited burly men with very stern demeanor.
Okay.
And my attention was distracted for a short while. I looked, and he looked like Bush. President Bush. I said, how can President Bush be coming into a meeting like this? There was no announcement, no indication that anybody like this was coming, because I thought if President Bush was actually coming into the meeting, there would have been, quarantining the building and Secret Service and security, or nothing like that. So I, instinctively I stood up, realizing that I interrupted myself and stood up, and slowly everybody caught on and stood up, and Bush walked around and sat at the head of the table. And then the question to him was, would he, everybody was surprised and taken aback about how to conduct the meeting from there on. Okay. So he said, start from wherever you left off. So I had the opportunity, privilege, or whatever the occasion, to continue what I said, and I thought the message went quite well.
Okay, I know, but it must have been a little eerie at that time to be interrupted and then to continue with such an important audience, listening to you. Dr. Subbarao, I have to take a mandatory break, but now I want to come back after the break and ask you, at a distance of 10 years, how did your own actions look to you? We are back in a minute.